Hi everyone, this is Matthew Cruz and I'll be sharing with you the April USDA supply demand report that came out this morning at 11 a.m. Let's quickly read through here our disclaimer that futures trading does involve risk. So jumping right in, they pretty much left the corn unchanged at 1.44 billion bushels. We'll get in more of the details on how they arrived at that number, but you can see that actually came in, well, it was unchanged from last month. It was still a little bit higher than what the trade was looking for. The trade was expecting them to come in a little bit lower. You kind of see that reflected in prices today. However, they did come in at what the trade was looking for in soybeans. They reduced those by 25 million bushels, and the market is up quite a bit today based on that. So overall, we have a pretty, I would say, more bullish report for soybeans and wheat, and fairly neutral in corn. And looking at the wheat, we came in at 678 million bushels. It was a little bit higher than what the average trade was looking for, and last month came in at 653 as well. So looking at global supply, Brazil soybean crop, they reduced that by 2 million metric tons from 127 last month to 125, pretty close to what the average trade was looking for. It's still probably behind by at least 2 or 3 million metric tons, but I don't think the trade really expected the USDA to catch up to that. They've been pretty slow up to this point. Looking at the corn, they came in at 116. It was an increase of 2 million metric tons. So 1 million metric ton more than I believe CONAB is at, and slightly higher than what the average trade was looking for at 115.3. And in the case of Argentina, they pretty much left everything the same at 43.5 for the soybeans, same as last month, and 53 million metric tons for the corn. Looking at global ending stocks, corn, this is why I felt like corn was a little bit more neutral. They came in at 305.5 million metric tons. It's about 5 million metric tons more than what the average trade was looking for, and was actually on the high end of what the range was. And last month we were at 301. In the case of soybeans, we came in at 89.6, a little bit higher than what the average trade was looking for, but still well within the range, and a very modest reduction from last month. In the case of wheat, we came in at 278.4 million metric tons. The average trade was at 281.4. So not much change from last month. They did reduce the corn imports from China to 23 million metric tons, and they reduced it a little bit in soybeans to 91 million metric tons. They reduced it by a few million metric tons, which I find a little bit odd. I think that they're going to have to update that because China is going to have to replace a lot of the grain that they were getting from Russia and the Ukraine, and there's not very many other places they can do that. So it doesn't make a lot of sense to me that that USDA would reduce that. I think you'll see them revise that higher as time goes on. Looking at the U.S. corn balance sheet, they reduced the feed and residual by 25 million bushels, but they picked that back up by increasing the ethanol. So they offset that by increasing the ethanol demand to 25. And so ultimately the ending stocks didn't change. So, not much happened in this report. So that's how we stay at this 1.44 billion bushels number, which is still predominantly low, all things considered. But I think as time goes on, you're going to see that number continue to deteriorate below that 1.44 billion number. Looking at soybeans, the biggest change was the increased exports to 25 million bushels. That's why I find it odd that they reduced those Chinese imports, but here they're increasing the exports by 25 million bushels. Some modest changes here to seed, increasing 4. That's just the fact that we're planting much higher acreage of soybeans than we have in the past, and then reducing residual, offsetting that by 3. And so ultimately we're increasing our stocks usage by 25 and reducing our ending stocks then by 25 million bushels from this 285 down to 260. Taking a quick look at wheat, we reduced our feed and residual by 10 million bushels. They decreased wheat exports by 15 million bushels, which again does not make a lot of sense. They're almost acting like the war in the Ukraine is not going on, or that that's going to come to some quick conclusion. The world is going to need more wheat, and they're going to have to find an alternative to what's going on in the Ukraine. But that is not reflective yet of what we're seeing in these USDA reports. And so, but I'm just reporting the facts, what the USDA came out with. And so we see the USDA increase by 25 million bushels, the ending stocks to 678 million. Just taking a quick look at what's happening with new crop today. So this is new crop corn. This is not the close, but at the moment we're up in new crop 7 3/4 cents. So we did make a new high in new crop, which is good. It wouldn't surprise me if we saw another correction here. You can see in the past that that's happened every couple of weeks. As we made a new high, have a correction, make a new high, have a correction, make a new high. So it's possible we could bounce back to this 685 area in new crop. But there isn't fundamentally, fundamentals are still supportive of making new highs. And so, the corn market kind of brushed off a more neutral report that they saw today. Look at soybeans. You can see they found pretty strong support level at this $14. This is a new crop, and we are up 20 right now in new crop. We're up 40 on the nearby contract in May, but in the new crop we're up 20. And so you could see this, as I said, they found support here. We've rallied back about 85 cents in the last week or so. And so I think it's very likely, especially based off this report, that we can go, at the very least, go back and retest these highs. I think the next resistance level is this 1520. And then if we can take that out, then we can go back up to this 1555, 1516, 5060 area. Looking at wheat, let me pull up a wheat chart here. So the nearby is up 30. The new crop contract is up 26 1/4 right now. So wheat's been despite a fairly neutral, slightly negative report, it's been responding positively. And so you can see that we've been moving higher, going back to retest some of these highs. There is some slight resistance at this kind of 1050, 1055 area. If we can break through that, we can retest these new crop highs, December contract highs at this kind of 1078 area. So we'll look for that going forward. So summing up, if you're a bull, you're obviously going to point to the continued Russia-Ukraine tension that's taking place. I'll point out that we're at peak acres, that we've kind of maxed out the number of acres we have. All we can really do is kind of rearrange the corn and soybean acres that we have. And so we saw from the planting intentions report last week that overall, we're not going to go over that 182 million acres between corn and soybeans. And so we're kind of maxed out at this point. Fertilizer prices are also extremely high, as you probably know. And so that's going to limit a lot of investment that people want to make in more fertilizer intensive crops like corn. There's also managed money has been pouring in more and more, and that's helped to kind of boost the commodity market as well. If you're a bear, you're going to point out that, hey, these high prices, eventually we're going to have some demand destruction. We haven't seen much of that yet take place, but it certainly begs the question when you have prices this high that eventually going to get to that point. You probably saw that a little bit more in the energy markets, looking at oil being as high as it had. The oil prices have been receding, and so that places some pressure on ethanol margins, ethanol prices, which of course reduces potential demand for corn. The ethanol stocks are very high right now. A lot of the technical indicators say, hey, we're oversold. However, we've been oversold now for several months, and we've continued to work higher. So So again, I want to thank you for watching. If you have any questions, give one of our brokers a call at 712-227-1110. Thank you, everyone. Have a nice day.